Morning, guys. It's Monday, April 14th, 5:25 a.m. Central Time. Grain markets just a little bit lower to start a new week. May corn futures down 1 3/4 at 488.5. May soybeans down 1.5 at 1041.25. May Chicago wheat down 5.5 at 550.25. May Kansas City wheat down 10 cents at 558. May spring wheat down 5 3/4 at 609.25. We've got tariff news, of course, to start the week. Let's go there.
The Trump administration announced on Friday that it will exclude certain electronics from reciprocal tariffs. The exemption covers key products such as smartphones, computers, and semiconductors. The administration will also exclude the electronics from Trump's 10% baseline tariffs. Last year, smartphones were the top U.S. import from China, totaling $41.7 billion. Chinese built laptops were the second largest import from the nation at $33.1 billion. Commerce Secretary Howard Lutnick, however, stated on Sunday that the pause is temporary and that the electronics will eventually be reassigned to a different tariff category. The White House is expected to provide further details on the exemptions and upcoming tariff plans here today.
Apple, the company, apparently was on the brink of crisis before the tariff exemptions were announced because they make so much in China. I looked this up this morning. 61% of American smartphone users own an iPhone, and a lot of those are made in China. So I guess that the tariff exemptions is it's a consumer relief thing, but it's also a big, I don't know if I call it a bailout, but it's a big deal for Apple, the company. The other 40 something percent is mostly Android users. And interestingly enough, Samsung, I think, makes most of those. And China is not a big deal there. They have Samsung has some Chinese suppliers, but most of them are made in South Korea, Vietnam, India, Brazil, other places. In any case, the stock market and some of the other markets also that we'll get into really like this. The S&P is 13.2% removed from last week's low, which is incredible volatility. And this headline actually was out after the markets closed on Friday. It was Friday evening. So you've got some more buying in the equities here early this morning. Let's go to the dollar, which was probably the big grain market story late last week.
So the US dollar index declined sharply last week. On Thursday, the index dropped below the 100 mark, reaching its lowest level since April 2022. The drop also represented a 10% decline from its peak earlier this year. The dollar has declined more than 7% since Trump took office and more than 2% since Trump recently announced new tariffs. The decline has coincided with a sell-off in U.S. stocks and bonds, suggesting foreign investors may be pulling back amid growing concerns over Trump's protectionist policies. Recession fears may also be weighing on the dollar as investors shift toward safe haven currencies like the Japanese yen and Swiss franc.
The dollar chart looks very, very bad. Lowest trade since April of 2022. So when this happens, when the dollar kind of falls out of bed the way that it has, a bid appears under commodity markets. And it doesn't really make a difference which one. The corn market has its own friendly fundamentals that we've discussed at length. We had a really strong looking close in the May corn contract last week. Even soybeans, which are still, I think, will eventually be affected by the Chinese tariffs, posted a really strong close last week. And people are puzzled by this rally in the soybean market. It doesn't make sense because we're in a full-blown trade war, I think, with China. But money managers sometimes are simple creatures. And I think at this point, they're just looking at a weak dollar and saying, hey, we're going to buy commodities. Crude oil's rallied back. A lot of stuff has rallied back. We had this big kind of reversal off of the lows in the Bloomberg Commodity Index last week. So a weaker dollar could be a story for the grain markets and could continue to be a story as we move forward.
Chinese commodity imports slowed drastically last month. Chinese government data indicated that Chinese soybean imports during the month of March were the lowest since 2007. Imports of other commodities like coal, iron ore, copper, and natural gas also fell sharply. Crude oil imports were the lone exception. Imports were up 20% and posted a 19-month high. A slowing Chinese economy and a rise in trade tensions are likely to blame for slower imports. The declines could have been even worse if not for recent government stimulus measures.
As it relates to our crowd, the soybean imports are a big deal. China soybean stocks are adequate. That's what USDA would tell you. So perhaps they can go a little while without increasing or even keeping imports steady. Maybe they can maybe they can slow down on imports for a little bit, and it won't really bother them a whole lot. Ending stocks are projected to be record high. Stocks to use ratio projected to be the second highest of the last 24 years at 34%, meaning that at the end of the marketing year, they're going to have 34 bushels of beans left over for every 100 that they use. So they're in a comfortable-ish situation when it comes to supplies. I've never been able to make heads or tails of like looking at this sort of chart and then being able to predict import patterns. It doesn't really make a whole lot of sense to me the way that they do it. But in any case, yeah, imports are down. China has some problems.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about Friday's premium video?
As it relates to grain marketing, I think that our viewers, farmers in particular, I think they're aware that prices cannot be predicted. There's nobody out there that can do it. But at the same time, in the back of their head, they're like, "Well, wait a minute. What if there is? What if I'm missing something?" You're always kind of looking, even though you know. I talked about how price prediction is not the way that professionals do this, and we watched a quick video to help explain this. We had some really positive feedback the last couple times I did 5 Minute Friday, and I think it's a video you guys should check out. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. It's information only. We don't want to sell you anything else. We want to send you our info for $50 a month. You get our morning email every single business day at 5 a.m. Central Time. It's jam-packed full of info. Our 6 most recent premium videos are included. Graphics, charts, my cash grain recommendations. Premium video goes out every single business day at 10 a.m. Central Time. Give that deal a shot this morning, guys. It takes about 30 seconds to sign up on your phone. I know you're busy. It's getting to be that time of year, but you can do it on your phone, and everything is super easily accessible on your phone. So give that deal a shot this morning.
Thailand is exploring the possibility of increasing U.S. grain imports. The country is evaluating a potential $2.8 billion boost in imports to help reduce its $35 billion trade surplus. The Thai Feed Mill Association is working with the Thai government to ease import restrictions and make U.S. grains more competitive in the domestic market. If an agreement is reached, Thailand would increase its imports of soybean meal, corn, and distillers grains from the U.S., shifting away from current suppliers such as Brazil. According to the Mill Association, the country could purchase up to 3 million metric tons of soybean meal, 4 million metric tons of corn, and 900,000 metric tons of distillers grains from the U.S. Thailand currently imports $68.2 million worth of American soybean meal and other crops, but does not import any U.S. corn.
It's a good story. I just don't know if the numbers will be big enough. I think they've got near record corn imports projected this year, and it's like 70 million bushels. It's not enough to move the needle, and they don't have anything on the books with regard to the United States and corn. So I don't know. It's a good story that maybe this trade war and the negotiations could result in some other countries buying U.S. grains, but I just don't know if Thailand's enough to really move the needle here at all.
Argentina's soybean crop is facing potential yield losses due to excessive rainfall. Heavy rainfall in March and recent weeks has left fields oversaturated, which is delaying harvest. According to the Buenos Aires Grain Exchange, the harvest pace is currently 4% behind the 5-year average. The combination of excessive moisture and high humidity has raised concerns about crop rot, which could reduce both yield and quality. There are also concerns that prolonged delays may lead to pod splitting if the soybeans are not harvested in time. As a result of the reduced harvest pace, soybean sales have dropped to their lowest level in a decade, with only around 20% of the crop sold so far. However, forecasts suggest a shift toward drier conditions during the second half of April.
I know we have some viewers and listeners in Argentina. Maybe they can help me out here, but I fail to see the excessive rain in the past precipitation maps. I looked at the last 2 weeks. I looked at the last 30 days. I looked at the last 60 days. I'm not seeing it. Last 30 days, most of your key corn and soybean areas in Argentina saw less than normal rainfall, 70 to 80%. You go up north, maybe half. So I don't know. There might be something I'm missing here. If I'm missing something, let me know, guys. But I'm not seeing it in the past precipitation data.
The funds increased their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday during the week ending Tuesday, April 8th. Large money managers were net buyers of 3,000 corn contracts. The funds were also net sellers of 27,000 soybean contracts and net buyers of 10,000 contracts of SRW wheat on the week.
Premium subs, you guys have the full fund tracker charts in your email this morning. The net long in the corn market is probably larger in real time. USDA's report was out on Wednesday or Thursday last week, and there was absolutely some buying after that. Soybeans, that's a modest net short, and that could be closer to flat in real time, depending on how you want to look at it. SRW wheat appears to be like the short leg of the spread and has been for a long time. And the wheat market doesn't seem to want to rally on this weaker dollar story like some of the other stuff that's out there.
USDA reported a flash sale of soybeans on Friday. U.S. exporters sold 4 million bushels of beans to unknown destinations. Of the total, 2 million bushels are for delivery during the current marketing year, and the other 2 million bushels are for delivery during the next marketing year.
So there's some new crop soybean sales, and to who we don't know, but this is the time of year where you typically start to see a little bit of that. And that's, I think, the fear when it comes to China and the tariffs is not necessarily old crop, because they're largely done with old crop U.S. business. It's new crop U.S. business that I think is going to be the concern now. China would typically come in and start buying new crop U.S. beans spring or summer, somewhere in that time frame. It's usually around June, I think, that it starts to pick up, and it varies a little bit every year. But I'd be more concerned, much more concerned about new crop than old crop. What did cattle do on Friday?
Cattle futures were higher. Live cattle were $160 to $282 higher. Feeders were $240 to $377 higher. Cash cattle trade was limited across all regions last week. Up here in Nebraska and over in the Western Corn Belt, cattle were $2 to $5 lower compared to the previous week at $208. Box beef softened on Friday. Choice was 7 cents lower at $334.22, and select was $1 lower at $313.96.
Stock market is higher this morning, I think, on the tariff exemption news. The Dow's up 350, S&P's up 68 points. Bonds are up a little bit. U.S. dollar is off again. Crude oil's up 57 cents at 62.07 in the May WTI. Have a great week, guys. Quick note, we are off on Friday. It's Good Friday. The markets are closed, so we'll be off. Have a great day. Be back tomorrow.